You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com and co-hosts Alex the Viceroy Jacobson from Options Express, Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block. We are, of course, your bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as from the ever interesting, ever exciting Options Insider Radio Network. And if you're one of those people out there who's been wringing their hands over Flash Boys, what does this mean? Is the market rigged? Well, we have a show for you. It's called Trading Tech Talk. Our most recent episode, we featured Blair Hull. He's a pioneer in options market making and, of course, options technology. He has a few very choice and interesting things to say about HFT and its impact on not only the options market, but the equities markets and the way the SEC has dropped the ball in their oversight of that space. So some pretty interesting, pretty contentious stuff. Check it out, Trading Tech Talk. You can find it anywhere our other programs are featured. And while you're there, be sure to download our mobile app. You can, of course, find it in the iOS App Store, the Google Play App Store, even the Amazon Kindle Fire App Store. A lot of great stuff for you guys to check out. I think you're going to like it. All right, joining me on the old all-star panel today, we have the usual cast of characters. Starting off with the man beaming in from the great state/territory/principality known as Maine, none other than the Rock Lobster himself, Mr. Andrew Giovinazzi. Andrew, welcome back to the show, sir.
It is lovely to be here, Mark. Lovely, lovely, lovely. It's a nice day, too.
Yes, thank you for filling in so ably in the old hosting chair. Both you and Mark took your turns in the big chair, and I appreciate it while I was off gallivanting in the far sunnier climes to the south.
No. It's fun to host the show. Like you said, though, you really got to think. You just can't sit here, and just chime in every once in a while.
Now try doing it while you're fiddling with all the knobs and wheels and fun stuff over here, too.
And trying to get trades executed on the closing stuff. I got to pay attention, man.
It adds an extra layer of fun to the whole process.
It does.
Speaking of an extra layer of fun, we are also joined by none other than the Viceroy himself, he of many hats, Mr. Alex Jacobson from Options Express by Charles Schwab. Mr. Alex, welcome back to the show, sir.
It's good to be here today amongst the sea of red in the markets.
Yeah, it was an interesting one today, and we will get to that in just a minute because it is time once again for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, and welcome to the Trading Block. If you've listened to the show for any length of time, then you know what time it is. It is time for us to break down what was moving, what was lighting up the old tape, what was moving on the old street today. And as Alex alluded to, it was quite the sea of red on the old street today. The S&P down a little over 2%, the Dow down about 1.6%, and the Q's down over 3%. A bit of blood in the water out there in tech land. Good old VIX cash ticking up about 2 handles exactly to 15.82. Since we touched on VIX last, we'll toss it to Mr. Andrew first. Mr. Rock Lobster, what amongst this sea of red or the sea of green from volatility land caught your eye in today's activity?
Just we're moving. The market. It's weird. Like it almost started like a boulder rolling down the hill where you had that first roll, like, we got to get it moving. And then so once it started moving, it seemed to pick up a life of its own. So vol kind of jumped. The VIX certainly is up 2 full handles. It's a pretty darn good jump. The VIX futures, I would say, kind of responding, but not responding hugely. Not quite getting backward either toward the end of the day. So as far as from, they were around, what are they close? At least my last tick here is about 4 cents over parity. So at least from a future point of view, market not quite sure that our little sell-off is over. There was some contraction, but as far as, could there be more of this tomorrow? Easily. Because I'm not quite sure why we had the rally yesterday, and I'm not quite sure why we had the sell-off today. But it looks like it's sort of more of the same in, a lot of the, what I would just call more expensive momentum stocks, price lines and stuff like that. Facebook was down, Amazon a little, Google. So I guess everybody is selling their growth stocks in the U.S. and buying Spanish debt for, what is it, yielding 1.8%, and those 5-year Greek bonds for 5%. I guess somebody blew the all clear signal for all that great European debt. I don't know how much has changed.
That's where all the cash is going. Spanish debt. That's where the money is these days.
If you buy Amazon at a 100+ multiple, I mean, I don't know what is a riskier purchase, to be honest. But there you have it. But I think vol pretty much kept pace with the move. And, when you have a 2% move, that's 4 handles away from the strike, vol is going to expand. And the funny thing is the VIX cash didn't even get over 16. SPY was down 2%, or almost 2% on the day. So it's over 2%. So at least to me, the volatility move was underwhelming relative to the gamma, or what the realized vol of what we've got. So, I mean, vol went up for sure, but it should have gone up a whole lot more, I think. So, I mean, real simply, people I'm not going to say, this is not what I would say is a panic sell-off. It was just a good old bull market sell-off. I guess people just wanted to sell some stock today, whatever. It is tax selling season, so people might need to raise money to pay taxes, and so that could be part of it. But it doesn't feel like VIX didn't hit 20, didn't hit 18 even, and it really struggled to get going all day. I mean, it sat up 1 handle for about 3/4 of the day and really didn't start to pick up until the end of the day. So I call it a very underwhelming volatility move for the amount of selling we saw.
You mentioned realized vol and indeed the gamma of vol, and that's a perfect segue in a few minutes to the product we're going to talk about. It just launched today, but before we do that, we'll toss it over to our good friend, Mr. Viceroy. Now, Andrew, you and I both being the old school floor hands, we kind of had the what's and whys kind of beat out of us. Why is the market down? Why is the market up? Hey, more buyers and sellers. That's kind of where I tend to fall on that debate mostly these days. But you're right. The one argument I hear that does have a little bit of resonance these days for these continued protracted sell-offs right now is, of course, it is tax time. People are selling. They've had a lot of run-ups last year, a lot of gains in the market. They need to pay some taxes. This is the one downside of an extended bull market. Right around April every year, people have to pay some taxes. So that's what I think we're seeing some of that right now. But again, I don't play a lot of that game because at the end of the day, it doesn't really matter why it's moving as long as it's moving. That said, Mr. Alex, what's your take on the Sea of Red, and what were you seeing, lighting up the old tape there internally at OX?
When I talked to the trading desk, they made a comment I've never heard before. I've been here 3 years, and the desk made an interesting comment. They said that they were handling trades today that were almost totally directional. And I've never heard that comment made by the desk before. And I talked at some length to them, and they said traditionally when the paper gets directional, that's an indication of a market about to turn. So I don't know how good that technical indicator is, but the traditional mix of premium selling and directional trading, not that premium selling can't be directional, but the thrust of what the desk said was it was unusual paper today. And interesting, when you and Andrew, and Andrew joked about the Greek debt, the irony is Greek and the city of Chicago now pay about the same thing for money. So if you live in the city, that would clearly be a concern. There was a lot of good fundamental, not good, but there was a lot of substantive fundamental news today, which took the market lower. I mean, the NATO satellite says the Russians are massing troops at the Ukraine border. And of course, the market just loves to go into Friday into a weekend with that kind of news. That's going to make people run for the exits. The other thing is the data out of China was terrible this morning. And everybody looks at China as somewhat of a bellwether. The attitude here is the United States economy continues to be the cleanest dirty shirt of the crew, but the fundamental news was just not good today, and there was an exodus to quality. As Andrew pointed out, I'm surprised that the VIX didn't go up more. I've mentioned in the past, we got a client here that trades what he calls the VIX ratio, where he trades the percentage move in the S&P versus the percentage move in the VIX. And by his metric, VIX underperformed today, and I agree with Andrew on that. Also, gold underperformed today. So maybe that's an indicator of it wasn't a mass exodus. We did have a little strength in the last hour or so. I mean, we took and added about 40 Dow points back, but it was still a screen of red. And the last couple of minutes, it was going down hard when the markets finally closed. So tomorrow will be a very interesting day, and tomorrow is going to be particularly interesting for the April 2 weeklies. Should be very, very interesting what we see trading tomorrow.
Yeah, it's an interesting point you bring up about the directional nature of the paper coming in to OX today, because OX clientele typically falls on the higher end of the retail spectrum. So they're doing a lot of things like premium harvesting and income, a lot of other things. They're not just using options as a surrogate for Delta. And yet it seems like today that was the case. And you're right. That's typically what we see when people are, I don't want to say panicking, but desperate to get in one direction or the other. Could be up, could be down. Today, I'm guessing it was down. So that's an interesting tidbit in and of itself, because you're right, we don't typically see that from the clientele over there at OX. But as we were talking earlier, as Andrew kind of alluded to earlier, with the gamma and the realized vol conversation, it is an interesting day today to be launching a new volatility product. And yet, that's exactly what we saw today. Sea of red on the screens. They finally launched the CBOE Short-Term VIX product, ticker symbol VXST. And if you're saying, Mark, they already did that, you're right. They did the futures last month. And now, for all of our listeners who've been waiting for the options finally went live today. VXST index closing today at 16.5. up about 30% or about nearly 4 handles on the day. So that's what we talked about before. Big VIX up only about 2 handles. This up nearly 4, nearly 2x the move. This really getting back to this being the gamma of vol, the vol of vol, if you will. It's an interesting product to have listed on a day like today. A lot of the action here in VXST kind of following along what we typically see in the big VIX product. Pretty much all of it located in the front month, and in the call wing, we're seeing about 3,000 contracts or so went up today, including about 2,000 of the April 16 calls. Only looks like about 60 puts went up total today. So not a lot of interest in VIX puts today. A lot of love on the call side. Not surprising given the fact that VIX Cash and VXST both gapping up pretty hard, but still pretty interesting paper going up here today. So it looks like for all the interest in this product, it did fairly well. Andrew, I know there was a lot going on today. Did you have a chance to watch this new product and play around with it a little bit intraday?
I would love to say I did, but I was too busy with all the other old school products that I already use. I mean, but you had a little volume and it got going. That's not bad for a product launch, to be honest. And everybody has to get used to the new kid in town. So I mean, most professional traders will take a couple of months and watch it trade before they sort of jump in, which is kind of what I would do. But if you have to make markets in it, that's a different story. But I'm looking at how the markets closed, and they were pretty. There was a lot of space in there to operate. So that probably was another reason why you didn't see a whole bunch of volume jumping out of the gate.
Alex, obviously it's very early days with this product, literally early day. It's the first day of it. But did you hear any anecdotal info from the desk over there that people were at least cognizant of it, or they were calling up to get a piece of this, or were they just way too concerned about getting short S&P right now?
Yeah, the desk was way too busy for specific commentary today. I do think, and you commented on the iVol giving you kind of funky data. I suspect, even though they listed today, much of the e-commerce community wasn't ready. So I'll go back to the desk and check. But I suspect today you couldn't trade it electronically on many platforms. I suspect you had to trade it with the desk today, and I'm not sure how much awareness there was. But one of the challenges in the e-commerce community, and one of the things customers always, kind of express concern about is, how come I get funky data on the first day? And candidly, a lot of times it takes some reprogramming, and that's going to take a couple days. We saw that last week with the Google distribution. And we had big red boxes up on the site that said, hey, be aware of this change in Google. And it was still half the calls that the desk got. So it takes a day or two. So I wouldn't take today's volume. Plus, the thing moved 30% today. I wouldn't take today's volume as an indicator of much other than I don't think a lot of people were ready. And if they did have their toe in the water, the thing moved 30%. I'm not sure that the risk systems are ready yet. So give it a few days to get kind of genuine feel for the numbers.
Of course, listeners, if you're interested in that product, we'll dive into it a lot more in our Volatility Views program tomorrow. So stay tuned for that. One of the other interesting, I guess you can't really call it a new product. It's more of a new tool launch this week. A lot of people have been writing in on this show and a lot of our other shows on the network saying, hey, what's going on with these swaps and these CEFs and what the heck are they? And is there any volume going up on these things? And a lot of people are asking that same question. So our friends over there at FIA, the Futures Industry Association, just announced that they're launching a new CEF tracker tool. Of course, that stands for Swap Execution Facilities. And what that's going to do is track the volume going up on these things. And like I said, I just came back from the big FIA show a couple weeks ago. And one of the narratives coming out of that conference was that there's 16 different CEFs, if not more. None of them are putting up any volume except maybe for Bloomberg. So it'll be interesting to see if this helps kind of parse it out and shows who the winners and who the losers are out there in swap land. And as well as if these products start to gain some traction, how you guys, the retail listeners, could actually utilize these. They're not traditionally an option product, but there are options on these products. There are futures trading over there at the CME. In fact, we just recorded our new long and short of futures options program over there, all about their deliverable swap futures over there. And they're thinking about the idea of maybe putting options on those as well. So there are more ways that retail can start playing with these products. We're going to keep an eye on this CEF tracker and see if this volume starts to pick up, and in turn, if that starts to develop into more retail-friendly type products that listeners of a show like this can really dive into. Anything else catching your eyes, Mr. Viceroy or Mr. Giovinazzi, before we roll on into the odd block?
The only thing I thought was the most interesting is the ridiculously low level in both currency volatility and fixed income volatility for treasuries. They're kind of like, it's almost like somebody has blown the all clear whistle and people are just selling stock to raise money. But other than that, things are okay. It's like the systemic risk part of the whole game seems to have just gone right out the window. Nobody gives a damn anymore. And I just find that odd. That's all. That's my only observation of the day.
Speaking of odd, that is the perfect segue for our next segment, the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, and welcome to the Odd Block. This is, of course, the portion of the program where we break down the interesting and or the unusual. Paper has letting up the old tape. Going to kick things off with a quickie here. This is some puts going up in RDA Microelectronics, ticker symbol RDA, closing today $17.67, doing a whopping 815 contracts today. The bulk of that, 500, coming in the APE 17.5 puts. We saw 500 of those going up, being purchased for about 20 cents. And you might say, well, interesting. Maybe someone's specking on some near-term downside here. But of course, if you look at the open interest, there's about 1,300 contracts open there. So this looks, at least on the surface, also because it went up in some small blocks, looks like this is essentially someone just taking some risk off the old table and closing out at least 500 of this 1,300 sitting here open. Senior Lobster, is that your take as well?
I would have to say that is my take. What I find odd is that, the stock is being bought out. So why even bother paying the 20 cents? It was one of those weird orders that, there was really no offer for them. They stuck a bid in. Bid got hit, then it went offered $1. Basically, all the offers just flew away, and then it got filled. So whoever was selling them were like, I think these things are worthless, but somebody's closing, and it looks like closing an open position. So it was probably a free 20 cents for somebody that had the time and the inclination and margin to do it. So just a real, one of those funky closing trades where somebody just wanted off their sheets and they couldn't do it for a nickel. So they had to do it for 20 cents.
That's painful when you have to take it off for 20 cents like that. But this has all the hallmarks of the risk manager saying, just take that off, clean it up. And this guy grumbling, saying, okay, and paying up to 20 cents to do it.
That's $10,000.
I know. There you go. That's his lunch budget for the rest of the month gone.
Yeah.
All right, moving on to another newcomer here in the old odd block, everyone's favorite, Bill Barrett Corporation. Ticker symbol BBG. This one closing today, $23.40. This is the name that does a whopping 352 contracts a day. This is size paper, ladies and gentlemen. But today we're looking at about 2,000 contracts going up. Pretty decent size for good old BBG. And we talked earlier, just on the last one, about closing puts. Now we're going to see some open-end puts. In particular, the May 22 half puts going up 2,000 times. This time they weren't buying, they were selling. The bulk of them went up just off the bid for, looks like some on a range of prices between 70 and 73 cents or so. About 2,000 times, like we said, on open interest of just 10 contracts. not much else really lighting up the old tape. Not much else even open out here in May. There's only a few 10 lots and a 20 lot. So interesting stuff. This is post-earnings paper as well. Earnings are on the 1st, so this is not an earnings play. You think someone's just drawn a line here in the sand in good old Bill Barrett and saying 22.5 this far and no farther?
I was thinking, go Bill Bailey, wasn't that? Don't you Bill Bailey? I don't know.
That's way beyond my time, sir. Maybe Alex knows that one.
I've seen actually this pattern in some of these oil and natural gas stocks, some of these explorers, some put sellers coming in here and kind of whacking them. These are stocks that are not near the highs, like we had a lot of these, a lot of the technology stocks, but the more UA I've been doing on these, the more I'm seeing people or, investors, whatever, traders taking long positions, dumping some puts in these names. And this, it doesn't look like a bad sale to me for somebody that wants to own this thing. But I'm seeing a little bit more of that in some of the like the oil and gas exploration names. So it's just something that just comes up. You keep looking at it and you go, well, it's another oil and gas name. Somebody's doing the same thing. So they could be right. I think it's worth keeping an eye on, but it seems like somebody's accumulating, or several people, who knows, could be hundreds of funds accumulating some of these names. But this looked like the same customer, just trying to get a decent fill there. They're just sort of filling them off the bid. Relatively cheap volatility in this stock. So, yeah, just get long, drawing the line in the sand, doing the two-saw, wheel of fun, and off you go.
It is a fun adventure on the old wheel of fun. All right, staying with the put narrative, because that was the order of the day today on these sell-off days. Moving on to another newcomer, Tower Group International Ltd, ticker symbol TWGP, closing today at a whopping $2.51, down about 8 cents on the day. This is the name that does about 700 contracts a day, doing 14,000 today. Once again, pretty much all of that in the old put side of the chain. What we wrote up was the May 2 puts going up at the time that we wrote them up about 5,700 times for about 15 cents. Looks like buys here. As the day went on, we saw more volume piling into that strike for a total of 8,300 on the day. All opening buys for the most part, only about 500 or so contracts open on that strike. We also saw about 3,500 of the July 2 puts going up later on the day as well. That's a different story. That's a strike with 8,700 contracts. Again, looks like similar numbers here. We could have someone, perhaps, Andrew, you think, closing and rolling to perhaps a nearer term month to get a little bit closer. This is still not an earnings play. Earnings are on the 17th, so those will be in April. But getting a little bit closer to the action. Is that your take here, Senior Andrew?
It didn't go up. It didn't go up as a spread. It was all of the volume was very scattered. It easily could have been linked orders. They went up on every floor possible trying to get the volume. So, at least with the May, we're definitely buying some of these puts. The stock itself is such a, it's kind of hard to figure out what the deal is with the $2 stock sometimes. It was close to a $5 stock. So, in this case, I don't know so much. It could have been closing and rolling, I guess, but I don't see why you would go the other direction. That makes no sense to me. But, why would you close, a July option and then roll to the May option?
You really want that gamma, I guess. I've long since given up trying.
It could be a love your broker trade where somebody has a really great idea. You can close these for 20 and buy these 2 months earlier for a nickel cheaper, and you save a nickel. This is awesome.
Yeah,
it's going to cost you $3 in commission.
Yeah, I've long since given up trying to wonder what some of these people are up to. But yeah, it is a weird one, and just the nature of the open interest on those strikes makes me suspect and scratch my chin and say perhaps they are linked. I've been doing this long enough to know when something like that smells fishy, and that indeed does smell fishy, though perhaps not as fishy as our final trade here, which is in GGP. This is General Growth Properties, Inc., closing today $22.25, down about 17 cents. And we saw a whole bunch of call paper out here in GGP. And surprise, surprise, because they have a divvy coming up tomorrow. So we're seeing some div plays going up here, as well as some people rolling to get out of the way of this dividend. What we wrote up here on the site was the April 22, May 23 call spread going up about 5,000 times for about 20 cents. Looks like they closed April and opened to May. They're rolling up and out on their short strike just so they want to get out of the way of that dividend. Again, we've talked about dividend plays many times here in the past, and also how the impact of this dividend, I'm not sure how big the dividend is, but these calls are already 25 cents in the money. I'm guessing you're going to have a lot of assignments coming in on this strike if you stay short there. So this guy making the wise maneuver and rolling up and out, but also seeing about 4,500 of the April 21s going up. That is on the only other strike with any sort of volume, any sort of open interest here, about 1,700 contracts. So seeing someone trying to harvest a little bit of those free dividends as well out here in GGP. Is that your take as well, Senor Lobster?
I have to concur. I can't even parse what you said. I just have to agree with it. I know it just shocked me, but yeah, rolling the 22s, it's high probability for a dividend. I don't know, 50-50. I'm not going to call it high, but because the name was trading about 22.45 or 22.50 at one point, which that would probably most definitely be an exercise. It's not a really high volatility stock. And somebody's like, you know what? We own the stock. We don't want to sell it. We want to keep getting our divvies, and we'll just roll to the 23s, make our 20 cents again for the next month, and say thank you very much. So just classic rolling play for somebody that wants to be long this thing. And this stock is near the top of the range as well. So, any long holder, if they're going to get taken out, they're getting taken out at the top, which is always, it's never a bad thing to get taken out on the high tick. As Mr. Tusaw would know, trying to sell his 700s in Apple, trying in in vain, I guess, to sell those 700s.
Yes, fond memories of the good old days out there in Apple. But yeah, this is probably some of the more savvy paper we've seen up here of late, and that shows how ridiculous most of the paper we've seen here when someone rolling up and out to get away from a dividend is considered savvy. But c'est la vie. Interesting stuff nonetheless, and listeners, something for you guys to keep in mind when you're out there writing all your covered calls and all these names that have dividends. You may want to pay attention to when those dividends are coming due, and of course how much it is, because that's going to factor into whether your short calls get assigned or not. So good stuff there, Senor Lobster. And now we're going to keep on rolling right on into the fancy hat segment, aka the Xpress Block.
The Xpress Block, brought to you by Options Express by Charles Schwab. Options Express by Charles Schwab lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources. Options Express by Charles Schwab is the online broker for all traders. Best of all, Options Express by Charles Schwab lets you trade stocks, options, and futures all in a single account on powerful yet easy-use trading platforms, including mobile devices. Visit optionsexpress.com for your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, listeners, you know what time it is. It is time for the Viceroy to don his fancy cap and take us behind the scenes into the world known as OX by Charles Schwab. Mr. Alex, you said you saw a lot of directional paper going up on the old trading desk today. What else caught your eye in the land of OX?
The mass exodus from momentum stocks. Andrew spoke about this a little bit, but if you look at the price lines, the Regenerons, the wins, everything that I hate to say literally had been $60, $80, $100 higher. If you look at, Andrew pointed out Amazon, which, Amazon is the classic conundrum stock. They've never made money, but the numbers are so incredible. They just murdered all that today. I mean, it was just, it was go down the list. And and looked for a quote that was in 3 digits, whether it was, Netflix or Tesla, and they just slaughtered them. So, is this tax selling? Is this a lack of growth, an expectation of a lack of growth? I don't know. If you think about this has been kind of a schizophrenic week. It's down 200, up 200, down 200. If we go up 200 tomorrow, we'll end the week unchanged, and have traded through almost 1,000 points of direction this week. That's what we used to call being dramatically unchanged. But the fundamental news was difficult today at best, and you did see a rush into quality. You did see people buying the bonds again. But I didn't see gold up enough. And, as Andrew pointed out, and I guess we talked about earlier, didn't see as much of a reaction in gold and in volatility as I would have expected. And that tells me there's still some disbelief. But on days like this, we get spec customers who are buying stuff $30-$40 out of the money on some of these momentum names, trying to buy, quote unquote, what they perceive to be cheap premium. I'm not sure I categorize it as cheap premium, but that was the directional bias today, and it was in all the momentum names. I mean, it's like you could tick off the list, and they just took them all out and hammered them today.
Good stuff. Thank you for that, Mr. Viceroy. And now we're going to keep on rolling right on into your segment because it's time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody, welcome to the mail block. This is, of course, the portion of the show where you guys get to take the reins, and we feature all of your various questions and comments. A lot of people writing in, a lot of great questions. I want to make sure we get to as many as we possibly can, so we're going to dive right into it. First up, we have a question coming in. I believe this is from our app. This is from Brian Collamer. He writes, Mark mentioned he thought us retail accounts should be trading SPY rather than SPX options in an option block episode. I'm selling iron condors in SPX. He puts in parentheses 2 contracts, just learning. When I looked at the same size trades in SPY, which would be 20 contracts, the commissions were killer. I like the idea of better fills in SPY and no open outcry trading, but seems like the commission fees really make them untenable at my levels. Am I missing something? Thanks for the great podcast, Brian. You're not really missing something. I can see what your point is here about doing 2 contracts, of course, Iron Condor, 4 legs. So you're going to do 8 contracts of SPX versus 80 contracts in SPY. So that is a substantial commission hike. And that is certainly something that for retail customers you have to be cognizant of. I could see why you'd like that. But at the end of the day, you say you're aware of, and you like the idea of better fills in SPY, but the fills are going to be demonstrably better when you're trading SPY. I'm pulling up some quotes right now. Granted, these are end of day quotes, so they're going to be a little wider than normal. Plus, on top of everything, we are, of course, recording this on April 10th in case I failed to mention the day at the top of the show. This is an extreme sell-off day, so markets are going to be a little bit wider anyway. But just looking at some of the end of day in just the week 2 contracts in SPY versus SPX, you're talking 2-cent wide market in SPY, which of course equates to about 20 cents in the SPX, versus the calls at least being $1.60 wide on the at-the-money strike in the 2 weeks out here in SPX, and the puts being $3.50 wide. Now, of course, heavy down day, the put's going to get some juice anyway, and those markets are going to tighten up when you open them. But still, about $1.50 is probably about the average spread you're going to see in there. So if you're going to want to come inside that, you're talking 75 cents just to cut the market right down the middle. So you're talking a very, 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 very wide spread that you're eating every time you're trading SPX. Now, if you're able to work mid-market and you're getting filled mid-market, then you're doing all right and stay with SPX, but you have to stay on top of those orders and really work them, because otherwise you're going to get hit for 75 cents, if not more, on the SPX when you're doing it versus figure 10 to 20 cents on SPY. Now, I know the commissions are going to be higher, but if you're saving that much per execution, then I think in the long run, you're probably going to be better off with SPY. Mr. Andrew, you probably get this question a lot from a lot of your clients. Where do you come down on the great SPY versus SPX debate?
You know, I think I like the SPX for, iron condors and things like that. When you work the orders from the middle end, OX has the nice little walk limit thingy. You can, and normally when, the volatility's pitching one way or another, you can probably get filled just, about 15 to 20 cents off the midpoint, just depending on which way vol's going. So, it does save the commissions. So I guess it depends on the type of trade, I would say, also where the SPY kind of lends itself a little easier. When we do some SPY VXX type trades, and those two, it tends to be a little easier to sort of get things done because you've got to be patient to execute in the SPX for the most part. With the SPY, you're only paying a penny or 2 pennies tops for the spread. Which should equate to 10 times that in the SPX. So your 2 cents in the SPY is 20 cents in the SPX, and obviously the markets are generally a little wider than that. So I am ambivalent as an old SPX trader. It is what it is, and I'm sure it won't last that way forever. But the underlying is a heck of a lot wider too. I mean, there's a lot. It's the SPY is a penny wide underlying, and the SPX is definitely not a penny wide underlying anymore. So you're gonna pay for the wider underlying. You're gonna pay a larger spread width at a minimum for the options. But if you put in like multi-leg trades, I think the SPX probably works a little better for condors and flies and stuff like that, because you really just have to get it past the electronic eye of the market makers that are providing electronic liquidity, and you'll get a fill. The SPY, I think if you're just gonna you just need to buy something fast and take the offer, probably works better. So it's just, again, sort of depending on what you're trying to do. Like Alex was saying, people were looking at directional. SPY's probably better because you're going to just buy 20,000 contracts and you're only paying up a penny. I mean, you can get those deltas fast there. So again, fast versus slow, I think, is the biggest benefit, cost benefit of the two products.
It's funny. As an old SPX guy myself, that's one of the reasons why I'm so reticent to send retail out there, because I just saw so many retail guys get run over out there. Everyone tries to work mid-market. No one gets it. You have to really be diligent. Obviously, the electronification of the markets over the past decade or so have really improved that process quite a bit. But I'm leery of sending people out there to get run over. It seems like iron condors are always the edge case. This is where everyone writes in because everyone and their mother loves iron condors, and this is where you're getting into 4 legs, 80 contracts, and that's where the tables start to turn a little bit against SPY. So I could certainly see an argument for going out there and doing a 2-lot in SPX and making your life a little bit easier. Alex, where do you fall on this debate?
You and Andrew pretty much covered it all. I mean, I think about friction. Friction is transactions cost, bid offer spread, and slippage. And the SPX is still a hybrid product. It's pit traded, semi-electronic. It's 1256 tax treatment. But boy, if I wanted to get out of something in a hurry, I would take SPY over SPX, and I'd pay a little extra commission. The devil's in the details. SPX is cash settled. That's a plus. The SPX settlement last expiration was horrible. That's a real minus, and you only need that once to pay for a ton of commissions. So I come down on the spider just about for every individual investor.
2 votes for SPY, 1 tentative vote for SPX here. So take that as you will here, Brian. Hope that helps you. All right, next up here, we have a question from AJ, and he writes, I was listening to the option block, number 266, Juice and Papers. This one goes back a ways. We are over 300 now. And he writes, and you guys mentioned how you saw unusual activity in FCX, which looked like a buy-right trade. My question, how can you tell when an option trade is a buy-right or options paired with shares trade? Thanks, AJ. Good question, AJ. This is something we come across quite a bit here in the odd block. You probably hear Andrew and I talking about it quite a bit. Did we see stock going up with this? There's a lot of different ways you can identify this kind of thing. Some of the simple ways, sometimes they're marked spread, or some other ways you can see in the order tag that they are marked that there was some sort of spread that went up, and you can go dig through the underlying and see if a big block of stock went up around the same time frame. You can usually, if you know basic options math, you can see what the delta is or guesstimate what the delta is of that option that they're trading. If they did it delta neutral, you know how many shares they're going to do. If they did it 1-to-1, you know how many shares. So you can use that to kind of help you. If you see big blocks that kind of add up around the same time frame, around the same numbers, you can usually put that together. That's obviously easier said and done with some of these little names we talk about that don't do a heck of a lot of volume, versus if we're talking about SPY or Apple, where they're just putting up shares all day long. Then that's really much more difficult to really say something was done tied to stock. There are some other ways you can really kind of parse that out in some of the really more active names, but it's a much easier task in the illiquid names that we profile a lot. Sometimes you have to use your own intuitive logic as well to see what you think this person is doing, and if they did do it this way, would they probably do it tied to stock or not? And that's something where a little bit of options experience helps you along the way as well. So those are a couple of the clues that we usually look for when we're doing the odd block and looking for things tied to stock. Andrew, any other tidbits you can offer for our friend here, AJ?
When vol drops, that's one. And you covered most of the stuff. It's just, when mostly people don't really sell out of the money calls to get short. They, as a floor trader, 80% of that paper, 90% of that paper was against stock of some sort. Only maybe when the market starts to pitch up a little bit, you get a little more speculative paper. But, when you see a guy selling 10,000 contracts, you normally don't sell 10,000 contracts uncovered, mostly because it's so darn expensive from a margin point of view for some of these funds to do that. But if against stock position, it's easy. So just watching a lot of this paper trade over the years, you just don't see that many flat out naked sellers of calls. Like in Johnson & Johnson, they just doesn't happen that often.
Yeah, certain names fall into certain categories. Another name that doesn't trade very often, you see a ton of puts going up a little bit 3 months, 6 months out, a huge size, probably an underlying holder doing that, or they're doing that with shares. So certain trades fall into reliable patterns as well. And if you've been doing this for a while, you can kind of pick up on that stuff. So if you're paying attention to this stuff, AJ, I recommend you go out there and get a good platform or play around with your broker's platform, dig into the time and sales a little bit. And that's where you can see where your trade and the options went up, the time, and then you can kind of look at the underlying as well and try to get a feel for if this went up tied to stock. Sometimes, even if they went up tied, the two prints won't go up at the same time, so that can be a little confusing. So give yourself a little bit of wiggle room. Don't expect that the options went up at 205, that the stock goes up exactly at 205. They put these prints up in all kinds of weird times, so that makes it a little bit more challenging. If they were a little bit more diligent with that, it might be easier. The stock might go up 10 minutes later, 10 minutes earlier, or way later, or way earlier, depending on how they put it up. So pay attention to that. Other than that, it takes a little bit of knowledge, a little bit of experience, and a good platform to be able to dig into the time and sales. And you should be okay. All right, unfortunately, that's all the time we have for the old mail block today, but I promise if you've written in, we'll get to your questions as well, so keep them coming. And now it's time for our final segment, Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. Like the man said, this is where we tell you what we're watching, what we're paying attention to for the rest of this week into the old weekend. Senior Rock Lobster, we'll start with you. What is really catching your eye? What are you paying attention to through the rest of this week? Obviously, an aggressive sell-off today. We're looking at vol. We're looking to see if the sell-off continues. So are those top of mind for you going into tomorrow?
Pretty much. I actually have some, we're kind of have like our strategy letter at Option Pit. We have a lot of dry powder, so to speak. So we only have, 20% of available margin even used. So I'm kind of just sitting around here waiting around for something to happen interesting. So I don't really see, like I said, the vol looked kind of underwhelming on the move today. Bonds jumping, a little freaky. Nothing is actually super exciting. I mean, I would like to say it was more exciting. I think the vol's just, if anything, it's kind of a little maybe cheap, at least in the big indexes. So I don't think there's a whole lot of edge selling it. Maybe like the iron condors, probably that type of trade right now. You're getting this sort of what I would say good old fashioned vol jump, which is just based on the realized vol. And if you can spread those things out long enough, it's probably a better opportunity for that type of trade. But as opposed to 2013, the iron condor traders are winning this year because we're kind of getting up to 1900, stopping, going back down to 1825 or wherever. So you kind of have a range, and the market really doesn't have a good reason to break out or break down, mostly because the global story, China keeps saying we're not growing as fast, but it's not like they're having a recession either. And the story gets better in Europe. It's getting better in some of the emerging markets. So, there's sort of the positive story that kind of percolates just a little bit, but certainly not enough to really drive stock prices higher. So, I think you take these vol pops, I don't think you sell at the money volatility. You're looking more out of the money volatility. And that's what I'm looking at for tomorrow, essentially. If anything at all that looks interesting there, maybe even in the Qs, we do have a little position we put on yesterday in the Qs, which is still doing okay. And we'll see what happens. But it's not like what I say I would jump in and buy a bunch of momentum stocks right now. No.
I like it. Only you, the Rock Lobster, sir, would say on the day of a 2% plus sell-off in the S&P that you're waiting for something interesting to happen. I like it. Good stuff, sir. Good stuff, as always. All right. And Mr. Viceroy, what are you watching for the rest of this week into the weekend, sir?
Tomorrow we start to get the banks. We get Bank of America and JP Morgan, and I don't think there's a ton of optimism that they're going to be big beats there. I think the street is looking for a little disappointment. The volatility in the sovereigns today was back up where we saw it last time. Everybody was talking about what was going on in the Ukraine. So even though we saw everybody rushing to buy the Gov 10 years today, both the UK and the German had realized vol. I think UK was 2.5% today. I think German was 3.5%. That's huge. That tells you that people are worried about the Ukraine, and if the Russians are massing troops. But we had a schizophrenic market this week. Up 200, down 200, down 200. As I say, I say this half tongue in cheek, but if we're up 200 tomorrow, we're going to be unchanged for the week or close to unchanged for the week. So we're seeing a schizophrenic market. There's a lot of stuff pulling on it. If the banks start to deliver decent numbers, which I don't think is the expectation, then we're back into rally mode. We wash the vol out, and if Ukraine becomes a non-event, then we're moving forward here. But I'm watching the 10 years and just seeing too much volatility in them. And then tomorrow we kick off the bank earnings, and we'll be watching that really closely.
All right, good stuff, Mr. Alex, as well. And that's all we have time for on the old Around the Block segments. Also, all the time we have for this episode of the Option Block. But before we go, really quickly, let me check in with each of my cohorts here, my partners in crime, to see what they have cooking in their respective necks of the woods. Starting off with you, Mr. Alex, what is cooking in the land of OX education?
Live event, April 26th, Saturday in Schaumburg. Jimmy Rouzan will be out doing his 3/4 of a day event, and I will try to sneak on there for a few minutes to do a hub. All the live events are simulcast, so you can come to the site and register for those events. Wednesday, April 16th, foreign exchange futures versus FX. An interesting conversation, as now OX is a Forex platform. There's a lot of interesting stuff going on there. NASDAQ is even rumbled about listing Forex on the exchange. That would be a sea change. Also, April 16th, Marty Kearney, my old buddy from the CBOE, coming over and going to talk about vertical spreads and how to position them based on implied. So lots of interesting stuff on the site. All the events are free. Just come to optionsexpress.com and sign up.
And Mr. Rock Lobster, what is cooking? How is the new gold course faring?
It's going good. We're selling it. People are taking it. So far, it's going good. All of our clients that have taken it appreciate the fact that they can stream it onto their tablet and look at certain parts of it whenever they have questions about, trade management or, any one of the topics that there's golly jeepers. There's probably 200 topics overall on the thing. So it is we'll just call it a dense course. So it's going well. No complaints, but nothing. We don't have any new webinars or anything coming out. So we will have an announcement soon about we'll be launching an RIA type of thing, but that'll be coming out down the road a piece.
Very cool. So now they can take the blissful voices of you and Mark with them wherever they go to listen to all of their educational material on their smartphones and their tablets. Very cool stuff. You can, of course, check that out over there at optionpit.com. And even though he couldn't make it on today's show, allow me to give a plug to the boys over there at RCM Wealth Advisors. Check out what they're doing over there at rcm.com. And all the cool stuff on the future side, on the asset management side as well as on the advisor side, which is, of course, why Uncle Mike couldn't be here today. Too busy rolling all of his puts. And, of course, we'll be joined by Uncle Mike and, of course, all of you here on the next episode of The Option Block.
The Option Block was brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.